Hey everyone, welcome back to the channel where we break down stocks with real data and straight talk. Today we're diving deep into FactSet Research Systems, ticker FDS, a financial intelligence powerhouse that's been quietly building momentum through AI and subscription growth. Let's kick things off with the big picture. FactSet sits in the financial data and analytics space, serving asset managers, banks, and corporations with integrated tools that combine data and software. The stock has seen some volatility lately, but recent earnings show accelerating annual subscription value growth and strong client adoption of their AI products, which is keeping the bull case alive even as broader markets shift. FactSet was founded back in 1978 and is headquartered in Norwalk, Connecticut. Under CEO Sonoki Viswanathan, the company now employs nearly 12,600 people and delivers a suite of data and analytics solutions that help clients make smarter investment decisions. Their platform reaches across the Americas, EMEA, and Asia Pacific, with a heavy concentration in the United States. This isn't a flashy growth story, but a mature compounder with recurring revenue from subscriptions and high client retention. Breaking down the revenue picture, the latest fiscal year shows the Americas segment contributing about $1.51 billion, EMEA around $580 million, and Asia Pacific roughly $235 million. Geographically, the United States alone accounts for over $1.42 billion, with Europe and the UK adding meaningful chunks. That geographic mix gives them some diversification while staying anchored in the biggest financial markets. On the earnings front, FactSet just topped estimates again in the most recent quarter, with EPS of around $5 versus the $4.44 consensus. That beats last year's around $4 and continues a steady climb in profitability. Full-year results show revenue reaching $2.32 billion, with net income at $597 million, delivering an EPS of around $16. Margins remain healthy, and the company keeps generating strong free cash flow that supports dividends and share buybacks. Management commentary from the earnings call highlighted accelerating ASV growth, particularly from AI solutions, with over 90% of top clients now using multiple AI products. They noted that AI-related client ASV is growing more than 50% faster than the rest of the business, pointing to deeper integration and new use cases that should drive future expansion. Guidance stayed prudent but optimistic on the back of these trends. Looking at the balance sheet and cash flows, FactSet maintains solid liquidity with operating cash flow of $726 million last year and free cash flow near $617 million. Debt levels are manageable relative to equity, and the company continues returning capital through dividends, yielding around 1.8% alongside consistent buybacks. Gross margins hover near 51%, while net profit margins sit comfortably above 20%, reflecting the high-quality nature of their subscription model. On valuation, the forward PE has compressed nicely into the low teens, sitting around 14 times for the coming year and trending lower in outer years. Our model puts fair value somewhere in the neighborhood of $440, well above the current trading level near $250. That suggests meaningful upside if growth holds, though remember, these are rough estimates that can shift with assumptions around growth rates or multiples. Strengths include sticky recurring revenue, accelerating ASV from AI adoption, and a strong competitive moat in data analytics. Weaknesses center on slower organic growth compared to pure-play tech and some exposure to cyclical financial clients. Opportunities lie in deeper AI penetration and cross-selling across their client base. Threats involve intensifying competition from bigger players and potential macro slowdowns hitting client spending. Recent performance shows the stock down over 44% over the past year amid sector rotation, though shorter-term moves have been choppier with a positive 8% over 3 months. Compared to the broader industry, FactSet has lagged, but appears to be stabilizing as earnings momentum builds. Wrapping up, FactSet looks like a compelling long-term holding for investors who want exposure to financial data with AI tailwinds at an attractive valuation. The combination of recurring revenue, earnings beats, and expanding AI usage gives it a solid foundation. As always, do your own research and consider how it fits your portfolio. Thanks for watching. Hit subscribe for more deep dives, and I'll see you in the next one.